Thank you very much. Thanks for the opportunity. So I'm charged with this question of impact investing and the social impact challenge. And what I'm going to do is just to say a little bit about where I come from Big Society Capital, and how that positions my thoughts, the size and shape and development of social investment in the UK, some of the social challenges that we all face locally and globally, and what solutions to this might look like. And I want to start with a line from Sir Ronald Cohen, which I think sets the scene for us all. And what he said, I think some years ago now, was if we do not tackle social issues very differently, a curtain of fire will come to separate the rich from the poor. And I think it was very prescient, and it's very relevant in current circumstances. Now I'm going to come back to this challenge. Just first of all, though, about us, we're an independent financial institution with a wholesale social investor and market champion for the UK. Those two aspects, being the champion, developing the infrastructure and understanding about social impact investment in the UK, and providing the finance. As a market champion, a range of different kinds of projects. Get Informed, for example, is to improve the level of understanding in trustees and non-execs of social organisations, trying to get practical, useful impact management rather than just a series of measures, and opening up retail social investment through crowdfunding and tax breaks. We have a very interesting tax break, social investment tax relief here. As an investor, we provide money to fund managers and social banks who then invest in social impact creators, the charities, non-profits, social enterprises, and so on. And now we have around about 900 million with our co-investors committed, and pressing on £500 million actually drawn down into frontline organisations. So that's us. What about social investment more broadly in the UK? Well, one of the things about the UK is that we haven't been invaded since 1066, and we haven't had a revolution since the 1650s. So pretty much everything in the UK that's ever happened is still there somewhere. So we have a very dense, very diverse sector of organisations creating social impact. And they address a huge raft of social challenges. Perhaps the newest social challenge on the block is the one bottom right there, social cohesion, which yesterday's incidents just remind us how important it is in times of great movements of people. Social cohesion cannot be taken for granted at all. It's a very important social challenge. In the UK, social investment is a new tool, relatively new tool, maybe 15 years old, alongside other ways in which social organisations can raise finance to do more of their work. We have a very wide range of social investors, from institutional to individual, from governmental to non-governmental, and across a spectrum of motivations. So we have a significant number of foundations and quite a lot of high net worths and family offices for whom the social return is paramount. We also have institutional investors for whom financial return is paramount. And we have quite a lot in between as well. To date, it's been a little bit of a barbell, people very socially minded, people very financially minded, and the middle has been thinner. I think this is moving, this is changing quite rapidly now, and we're seeing some very interesting mixed motive impact investment coming along. What we've done as a wholesale social investor, created by government but now independent from it, has supported the growth in volume of impact investment, but more particularly diversification. Go back 5 years, and overwhelmingly, social impact investment in the UK was properties by which social organisations could do their work. Now, a huge range of different kinds of investment by different kinds of investment actors, and almost every model you can think of, and some which are deeply surprising. If we look at the scale, so in the UK we have around about a 40 billion annual turnover of social sector organisations, nearly 1 million organisations, employing between them nearly 1 million people. However, it's a very skewed group of organisations. Out of the near 1 million of civil society organisations, the great majority are pure voluntary, or maybe one-person outfits. And the investable universe, if you like, of organisations which actually have a team and could cope with entering into social investment is probably no more than 30 to 40,000 organisations. So it's a much slimmer group of actors than might be seen from this. When we look at social investment, this is our analysis as of a year and a couple of months ago, 1.5 billion of social investor money into regulated social organisations as at the end of 2015. And that was going into around about 3,000 organisations, but with a 20% growth rate. So that 1.5 billion looks pretty paltry compared to the 40 billion turnover of the social sector in the UK, but a 20% annual growth rate is pretty spectacular. Standing back from that, though, we are humbled by this chart. This is the total size and shape of all kinds of investment from all actors into the UK's social sector. And that 1.5 billion is the little left-hand slice. What's the big chunk of it there? The big chunk of it there is commercial investment into social organisations, and overwhelmingly that is our social housing industry, whether they do it by bonds or by investment through investment funds or whatever it might be. So that's where I come from. That's the size and shape and development of the UK market. Let's come back to that Ronnie Cohen challenge. And perhaps to take it apart a bit, the challenges that we have right now, the position in many countries that government income just doesn't meet welfare expenditure anymore, and the urgent need for a more efficient and effective, innovative social welfare provision. Gross inequality, disasters, wars, mass refugee movements, the position in Europe being particularly strong at the moment. Those are things which are now. There are things that we know about coming along for the future, ageing society, climate change issues, for example. But there's also rapidly coming ahead the next wave of social challenges that we have to start planning for. Been a lot of reports recently on the likely impact of artificial intelligence and robotics on the labour force. Jobs may be wiped out on a very, very quick development, too quick for new kinds of jobs to be generated. And genetic selection. Already in some parts of the world, wealthy families are choosing which of their embryos is going to be most intelligent, most resilient, most healthy. With the advent of CRISPR technology, this could develop much further, and we see the potential for a really ultimate kind of inequality, almost a splitting of the human race. And what does that do for social cohesion and all other kinds of problems? So current challenges, immediate known challenges, and next wave challenges that perhaps we haven't even thought about. I want to just have a look at some of those challenges. So inequality of income. This is the 20-year picture globally by percentile of income distribution up to the point of the 2008 crash. And you'll see that the very poorest remain very poor. You will see that the emerging middle class of countries like China and India have done well. You will also see that the middle class of the US and Europe has done very badly, and we see the consequences of that politically. And then the global top 1% doing well. And if I'd drawn on the global top 0.01%, it would have been through the roof. That was a period during which the 0.01% of the population really cornered half the world's wealth. They call this the elephant picture. I think it's a hairy mammoth, actually, because it's got that hump on it. But this really tells us quite a lot about the politics that we're encountering right now. If we look little bit longer term, this is 1977 to 2014, 2015, I think, and this is UK only, you can see there that for men working full-time, the lowest income, 25% of the population, have had no meaningful real wage increase, real terms wage increase, for 50 years. So somebody's grandfather was the last person to have a real benefit in take-home income. For women, it's a slightly better position, but starting from a much lower base. So is it any surprise that social cohesion issues are very strong? Is it a surprise that we have a revolution of people saying, we just don't trust governments, governments just don't do anything for us? If we look at another issue, ageing society, this is a nice little rag chart. Red is where the highest proportion of people are over 60, and green the lowest proportion. And you can see already in 2015 that there are a number of developed countries, Italy, Japan in particular, where there is a challenge of ageing society, a challenge and also an opportunity. People are living longer. This is good news, but the question really is the extra years of life being matched by extra years of healthy life, or is it a social and health, social welfare and health burden? So that's the position now. This is the position expected in 2050. And this is really startling. We have a massive challenge in the coming decades around ageing society. And for some countries, particularly China, where it's a cliff edge issue from the one-child policy, this is absolutely dramatic. And we know what happens to economies where the society ages that dramatically. So there are some massive challenges ahead. But we've achieved great things in the recent past. This is a RAG rating of progress on the Millennium Development Goals by goal and also by region of the world. And you don't need to look at the details of it. Yeah, there's some areas of failure, but it's largely a sea of green. Those Millennium Development Goals were regarded as wildly optimistic, but just look at that pattern of how much was achieved because we had a concerted view about what we were trying to achieve as a global force. Our capacity to use impact investment to tackle social challenges is also growing. So this is the GIN annual survey, reported investment activity and planned investment activity for 2016. You can see that it's already 15 billion plus in US dollar terms, and expecting 15% annual growth. So this is news that more and more capability is being built, and actually impact investors are happy with what's happening. They're happy with financial returns. They're also happy in impact terms, social impact terms. The majority either in line with expectation or outperforming rather than underperforming. So big challenges, but we've achieved big things in the past, and our capability, our capacity to tackle new challenges is also increasing. So what might the solutions look like? Well, here are my thoughts, and these are very personal thoughts, and really just to throw out and see if people want to knock them around or knock them down or use them. And they're these four things. If we set clear shared goals, if we use all the contributors, if we team up with those contributors to achieve the goals, and if we reduce the friction, increase the feedback to encourage and enable a broader impact investor base, then I think we can meet pretty much any challenge that's thrown at us. Let's start with that first one of setting shared goals. Without shared goals, everything is just messy, and big things are hard to do. And we have shared goals. We have the Sustainable Development Goals. And for the first time, These are applicable to every kind of country, developed countries, developing countries. I can look at that and think about the poverty premium in the UK, about good jobs, about environment. I can pick out things that are very relevant to us right here, right now. Using all the contributors. Well, we have charities, non-profits, we have social enterprises in many countries, government actors are important, and then there's a growing number of mission-led businesses, profit-with-purpose businesses, the B Corp movement, and a wider frame of companies which are committing themselves to achieve positive social and environmental benefit in the coming days. And one of the things about this from a point of view of impact investment is this, that profit with purpose, businesses seeking impact, social and solidarity enterprises, they're at this combination of strong commitment to social impact and unlimited profit distributions, which means you can use equity finance, which means you can move faster and use more tools of impact investment to achieve the scale that you want. This is why it's so important. I want to see the deep social understanding of non-profits and charities right the way through to the scalability and enterprise savvy of mission-led businesses and bringing those partners together to achieve. And bringing them together in an ecosystem. I've stolen this from the Case Foundation. I love this as a way of identifying all the different actors that you need to create a viable, vibrant ecosystem where impact investment can truly change the needle through all of these organizations to achieve social benefits. If I take one example in the UK, tackling the poverty premium in the UK. Poverty premium meaning the higher costs that people on low incomes pay for basic goods and services, things like energy supplies, access to credit, insurance, household goods, those kinds of things. So Joseph Rowntree Foundation, a research and development foundation in the UK, did the analysis and built up the sort of political awareness of the issue. We took a look at it and said, hang on a minute, there's investable pieces here, new ventures to tackle some of these issues and address some of the extra costs. We put it out to a wider frame of organizations and charities, social enterprises, CDFIs, profit with purpose, foundations and so on have come in. We've engaged the top commercial accelerators, value-based accelerators, but people who really know how to get new ventures to scale quickly. We'll look at corporate behavior change, companies that want to join into this, government regulatory efforts and so on, right the way through to deep dive ethnographic work in some of the poorest towns and cities in the UK, so that we understand how do people live their lives with these problems, and from that can identify the sorts of solutions that people will trust and engage with. So a really rounded ecosystem around one particular issue in the UK, which we think is a solvable issue. So the final thing in my list of four was reducing friction, increasing feedback, so that more people come into impact investment, broadening, deepening the impact investor base. And now in the UK, we have good organizations, successful organizations in almost every part of finance. But how do people find these places? Are the channels available? Is the regulatory framework stopping organizations from saying to people who might be interested in impact investment, hey, here we are? What are the channels to market? What are the regulatory holdbacks? How can we get brand recognition? A whole range of questions about this. The country that I would say has done this best is France, with the 90-10 savings schemes, 1 million people voluntarily engaging their long-term savings into a social and solidarity savings scheme accredited by the Financial Committee, bringing together 6 billion euros for impact investment. Really fantastic achievement. At the moment, it's complex, it's hard to find your way to this, but that is starting to change. And just now, just in the last few months, we are seeing big moves towards impact funds being developed by major financial institutions. And you will have seen some of them, names in the press. Why? Customer pressure. It is customer pressure that is telling big corporate finance, you've got to offer a social impact option. 72% of pension savers in the UK said it's important to them to know where their pension is invested. 46% wanting their investments to reflect their social and environmental views, even higher for millennials. It's this kind of pressure that will make the change that we need to the big scale investors to change their tune and open up new opportunities. So back to Ronnie Cohen and that wall of fire question. But he also said this, he said, many of us talk in terms of the invisible hand of the market. For example, a baker bakes to make a profit, and if in the end he feeds the poor, everyone's better off. Here we're talking, he said, about the invisible heart, people who are motivated to improve the lives of others. Well, I think, yeah, we can avoid this wall of fire. We can address the challenges ahead of us if we focus on clear goals, we bring in all the contributors, we team up those contributors, having all the tools that are necessary to solve each problem, and that we open up impact investment to the population at large. And one thing I would challenge on this particular quote is if we are much less invisible. So let's be the very visible heart of the market and make impact investment a key tool for the future to tackle social challenges. Thank you.